Entrepreneurship in Pharmacy. Presented by pharmacist Dr. Nwazuzu Azudo, PhD. Part 4. Accounting and Financial Management of a Pharmacy Business. Accounting. Accounting is the recording of business transactions in monetary terms. It is the language of business. It is usually done in two phases. Phase 1 involves bookkeeping by bookkeepers. Phase 2 involves analysis and interpretation of accounting records for decision making. This phase is performed by accountants. Financial management. Financial management deals with the sources and application or use of funds. Long-term funds are used for long-term investments, while short-term funds are used for short-term investments. Accounting records. To maintain an effective control of the business, the following records should be kept. 1. Purchases book. This contains figures from invoices received from suppliers. 2. Sales book. This contains figures from vouchers and receipts, made out by salesmen in the business premises to customers. 3. Returns book. This contains figures from debit and credit notes. It is of two types, returns inwards and returns outwards. 4. Cash book. This contains figures entered by the cashier when cash is received or paid. 5. Ledgers. These are classified records of personal, property, income and expense accounts, extracted from purchases, sales, returns, and cash books. Characteristics of accounting records. 1. Accounting records employ the double entry system. 2. For every credit, there must be a corresponding debit. 3. Use of credit and debit is different from everyday usage. 4. Each account is shown on a separate page. 5. The double entry system divides each page into two halves. 6. Debit is on the left-hand side, while credit is on the right-hand side. 7. The title of each account is written at the center, across the top of the account. 8. The fundamental accounting rule is, debit the receiver, and credit the giver. For instance, when money is paid into your bank account, the bank will debit its account, that is the receiver or debtor, and credit your account, that is the giver. 9. The basic accounting equation states that assets are equal to liabilities plus capital. Assets. The assets of a business are the things the business owns. There are two types of assets. 1. Current assets. These are assets whose useful lifespan expires within one financial year. Examples include stock, work in progress, debtors, prepayments, money in the bank and cash at hand. 2. Fixed assets. These are assets whose useful lifespan lasts beyond one financial year. Examples include buildings, machinery, furniture, fittings, motor vehicles, etc. Liabilities. The liabilities of a business are amounts the business owes to outsiders. There are also two types of it. 1. Current liabilities. These are liabilities that are payable, or due for payment within one financial year. Examples are overdrafts, creditors, accruals, rent, tax, wages, etc. 2. Long-term liabilities. These are long-term loans due for payment after one financial year. Capital. The capital of a business is the amount the business owes its proprietors or owners. It is not normally due for settlement until after the business liquidates. Examples are seed capital, working capital, etc. Financial statements. These are statements used to describe the various accounting reports. Some of them are statutory, example profit and loss account, and balance sheet, while others are not, example, cash flow statement, profit and loss account. The objective of a profit and loss account is to determine profit, that is earning, or loss, at the end of a financial year. There are two types of profit. 1. Gross profit. This is the earning of the business before interest and tax, EBIT. 2. Net profit. This is the earning of the business after tax, EAT. Financial ratios. Financial ratios are ratios used in the analysis of financial statements, to determine the performance of the business. These ratios include the following. 1. Liquidity or solvency ratios. First off, liquidity is the availability of cash, or near cash elements, like banks, debtors, stock etc., which can be used to pay debts and maturing obligations. An unprofitable business may continue to be in business for some time, but not so for an insolvent one. This is because creditors will be unwilling to sell on credit. Workers may embark on industrial action, while shareholders may doubt the survival of the company because of the risk of liquidation. Liquidity or solvency ratios includes 1. Current ratio. This is calculated by dividing the value of current assets by the value of current liabilities. A ratio of 2 to 1 is often desirable. However, it is often better to compare it with the industry's average. 2. Quick ratio. This is calculated by subtracting the total stock value from the current assets value and dividing it with the current liabilities value. 3. Working capital. This is calculated by subtracting the value of current liabilities from the value of current assets. 4. Cash flow. This is the amount of cash generated by the business. Note that net profit is not cash. Cash flow is roughly calculated as net profit plus depreciation. Profitability ratios. Profitability ratios measure the efficiency of the business in generating profits from its operations through sales and use of its assets. They include the following. 1. Gross profit margin. This is calculated by subtracting the cost of goods sold from sales, dividing the obtained value with sales value, and multiplying by 100. 2. Net profit margin. This is calculated by subtracting cost of goods sold, expenses and tax, from the sales value, and multiplying by 100. 3. Return on investment, ROI. This is calculated by dividing the net profit after tax value by the equity value. Other recommended topics. To further broaden your knowledge base on business management and administration, and to enhance your chances of success in your pharmacy business, we recommend the following topics to you for further reading. 1. Inventory management. 2. Public procurement of drugs and healthcare commodities. 3. Drug logistics and supply chain management. 4. Healthcare financing. Thank you for listening and God bless you. The script of this lecture is also available in the description of this video below. Feel free to check it out. We hope you learned something from this lecture. If you did, kindly like and share this video. Also support this channel by clicking the subscribe button, as well as the bell button beside it, and select all from the options. That way, you will be notified of any other video we publish on this channel. Remember that this is a computer-modified audio version of this video, made to ensure that our audience in different parts of the world can hear and understand the lectures. The original audio version from Dr. Azudo is also available on request. Just subscribe to the channel, and make your request in the comment section below, and you will get a response. Till we come to you again, with another interesting video, we wish you the best in your business ventures. Bye for now, and see you in the next video.